Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. Tonight we're going to go over all of the closing and opening orders that we had here for today on September 4th, Thursday. So had two new opening orders, one closing order, no adjustments, a little bit different than last night where we had just a bunch of adjustments to current trades. It was a really interesting day in the market. It seemed like a lot of things, popped higher early in the day, but then the market really couldn't catch its feet and continued to sell off pretty much into the close. It didn't sell off at the lows of the day, but a lot of the big names like Apple, Google, etc., they were down some significant amounts today, and bonds were actually down pretty decent today as well. So pretty wide base sell-off that we saw, and maybe it's the beginning of something new. Who knows what the story is with that? But we did have a chance to enter some new trades and then get out of our one VIX position that we did have. So I'm going to go over all of those for you guys. The first one that we're going to go over is our FXE position. So FXE, which is the Euro ETF that tracks the Euro, has just been smashed. I mean, the thing is just keeps getting pushed down and pushed down and pushed down. And so what we're trying to do here, or what I'm trying to do with my trade here, is take advantage of possibly move higher in that over the next month and a half. So we went all the way out to October, traded the 27.29 debit call spread. So we paid a price of about $1. So that puts our break even right at 128. So exactly at 128, we need FXE to trade above 128 anytime between now and October expiration. So we have a lot of time in this trade. And if I go to the chart here of FXE, this is actually a 3-year chart, just to give you a little bit more perspective. But you can see how just beaten down this thing has been. And not to say that it can't continue, because you guys know as well as I do, and I say it so many times on the blog and with these videos, is that stocks can continue in this downtrend for a long time. But we're making a $200 bet here that the stock is going to, at least in the next 45 to 50 days, bounce back up. So that's the bet that we're making, and you'll notice as we zoom in here, after I take off the highlighter, as we zoom in here, that we're pretty much getting it at the low, at least on this chart, and our break-even price right now is at 128. So we just need the stock to continue up just a little bit for us to make money on this trade. What's really interesting about this trade in particular is that when we actually entered this order, implied volatility was actually below the 50th percentile. So you'll notice up in the top left-hand corner of the screen that IV rank is now above 50th percentile and is at 57. So if you did not get into this trade and you want to get into this trade tomorrow, you can do one of two things. You can either A, get into the same trade that we got into and get better pricing. You can get into the 127, 128 call spread, because that pricing is right around 50 cents, which would give you still a very good break even. Or you could potentially go further out of the money on the puts and sell a put spread below the market. So now that we have higher implied volatility in FXE, we have an opportunity to then sell some premium. So we actually might do a combination of selling some premium in this thing here in the next couple weeks. So if implied volatility stays high, and if this thing doesn't turn around as quickly as maybe we hope it would, then we have a great opportunity here to add to this position and sell some premium around it. So don't be afraid to add to positions like that. We're definitely going to be in the wheelhouse of doing that very, very soon if it doesn't turn around quickly and continues lower. Okay, the other trade that we got into today was a very nice iron condor in EWZ. Now, as a quick side note in EWZ, and just a side note in just patience in trading, I've been trying to get into this iron condor in EWZ for 3 days now. So I know I get a lot of emails from people saying that they don't get right into the trades as soon as I send out the alerts. But you just have to have a little patience, stick with your price, understand that you're probably going to get somewhere around that price. You can adjust it up or down by a couple pennies. But I've literally been trying to get into this trade for 3 days, and I could have adjusted my price lower, well below 30 as a credit, but that's not the price that I want to get for this trade. And so I'd only accept 30 for this trade because of where I want to make money and what my break-evens are and things like that. So you just got to be patient with it. But finally, this trade actually filled for us today on EWZ. For October, we went out and did the 58.59 call spread, so all the way up at 58 and 59 on the call side. And on the put side, we did the 49.48 put spread down below the market. So remember, an iron condor is basically just two credit spreads mashed together. And we took in a nice premium of about 30 cents. So because the width of our strikes is $1 on both of these, So both of these width of the strikes is exactly $1, and we take in a credit of 30 cents. That means that our risk is about 70 cents or $70 per iron condor that we're trading. But we're trading these very far out, so I'll show you guys here show you how far out we're trading those here in a second. But you can see here a chart, and let me just go to my base chart. You can see here that EWZ has made a huge move higher, and today when we entered this trade, implied volatility was actually above 50, and unlike FXE, which rose in implied volatility, EWZ has already come back down below the 50th percentile for implied volatility. But you'll see where our strikes are. So we're at 58 and 49. So very, very wide on this iron condor, especially for a stock like this or an ETF like this that doesn't move too fast. I mean, it's a fast mover. It's definitely a mover. But you can see that it spent the better part of April, May, June, and July in a very, very tight, about $4 range. So we have a very nice wide $9 range here that we can work with. So I really like this iron condor, hence why I was very adamant about getting my price for that spread. If I go to the actual trade tab here on Thinkorswim, you guys can see exactly where my positions are. And it looks like a lot of you actually got into it too, because there's a lot of volume today, and that's usually a lot of traders on our end here. But you'll notice that the first strike on the top side is at the 85% probability of success level. So that 85 right there at 58 says that basically there's an 85% chance that EWZ does not go and close above 58 by expiration. And down on the bottom side, it's about the same, just a little bit less on the bottom side, about a 75% chance that EWZ does not go and close below 49 by expiration. Now, when I actually entered this trade, those both were about 80%. So I tried to match up each side, and that's something that you should definitely do if you're making these trades, is try to match up the probability of success on either side, because then you have a very even and balanced trade. So if I was making this trade all over again today, re-looking at where the market moved, I might go down to the 48, 47 on the put side, and I might move my call side down a little bit to the 57, 58 on the call side, simply because those both have an equal probability of being hit on either side. So that gives me a very balanced iron condor, and that's really, really important with the trading, because we just don't know where the stock is going to go. All right, and then so the last trade that we closed out of here today, or the only trade that we closed out of, is our VIX vertical call spread that we had originally sold. So when the VIX popped higher a couple weeks ago, we went in and sold the 17.19 call spread, bought that back today for a 10-cent debit, and I forgot to put the profit on here, but I think it's probably somewhere around 25 cents, 20 cents in profit per vertical spread that we sold. So somewhere around $60, $70 should be your profit. So very easy trade. The VIX trades are always really, really easy in my opinion. I think that they're probably one of the better trades that we do, only because we know that the VIX is very downward driven. So when the VIX had popped up higher up here, we went ahead and sold the 17.19, which is all the way out of the money. And so now the VIX is much lower. Had a couple people ask me, well, why'd you get out of the spread for 10 cents? Because there's still a risk that the VIX pops up before expiration, and especially how high the market is right now and how much short interest, there could be in the market with just stocks moving down. I don't want to take that risk of, erasing this gain that we already have. So just like all of our regular trades that we make, where we see a nice big profit, more than 50%, more than 70% of our max potential gain, we're just going to go ahead and close out this trade, take the profit off the table, and move on to the next trade. So I'm fine with that trade. Try to get out of this trade for a little bit less today than 10 cents, but it actually ended up filling right at 10 cents, which kind of makes sense because it's a round number and most traders put in their orders at round numbers. But I did try at 9 and 8 and just really didn't get any fills, so moved it up to 10 and adjusted it, and it filled very quickly. So you guys shouldn't have any trouble getting out of that trade. So as always, I hope you guys enjoy these videos. If you have any comments or questions about these trades or any of the trades that we make, please let me know in the comment box right below here. If you're watching this video somewhere else online or on YouTube, you just have to understand that you're getting this video about 15 days after it's sent out to just our members. So if you like all of these trades and you like the idea of getting trade alerts and a video that accompany those trade alerts the same day, then you've got to sign up for our free trial at optionalpha.com. Go ahead and get your name and information in there. Kick the tires. We'll send you out all these alerts and these videos during your free trial. Absolutely no risk on your side. As always, happy trading.